Well, good afternoon, everyone. It's about 10 to 3 on Thursday, the 10th of June. We're 22 minutes into the American trading day, and the market would seem to have broken. The market has been waiting on that American inflation number all week, and really it's done absolutely nothing all week. It would seem to have broken in the direction of the trends on Victor Vest, I'm very happy to say. Advances twice that of the declines. All the measures of the trend on the Victor Vest composite are up. Let's just have a look. And on Victor Vest, that's the S&P 500, and as you can see, that level incredibly important and been holding the market now for what, 1, 2, 3, 4 days. I have a position that I put on Monday afternoon, and it's finally moved into profit, nearly at its nearly made as much as I initially risked, not quite yet. Been a very frustrating week, but sometimes you have to sweat them out, and clearly very frustrating after the volatility that there's been in these markets over the last 18 months. The last stint that I did at the institutional level, I quit because of a week like that. I just couldn't take it anymore, because if you work at the institutional level as a prop trader, you just have to be there, and you sit there watching the screen all week as nothing has happened. It frequently happens before big American numbers such as the non-farm payroll and inflation, as inflation's in the spotlight at the moment. So if we have a look at the 4-hour chart, that's the 4-hour chart. That was that's where I got in on Monday afternoon at 4224. My stop loss was at 4198, and clearly this is going to happen in a sideways week. Everybody's waiting in the number. The market makers are going to have a run at the stops and have a bit of fun, and that's exactly what happened. And as you can see, it came down and nailed all the tight stops today before moving up. So it's at 4247. Clearly there's a huge number up here as well at that high, but that's as positive as it's looked all week. Let's see what happens. I'm still positive of a strong move in June. The next target for me on this chart is about 4273, and clearly we can get there quite easily with a reasonable breeze behind us. Now, if we have a look at the gold market looking better and vibrating to the Fibonacci sequence. If we have a look at the 1-hour chart, if I can get it in the right place, that little double top on those tweezer tops, I think they're called in candlestick format, is exactly 78% of that range. And you've guessed it, this low today where the market spiked down to the orders of 78% of this range. We've got 5 waves up here and a corrective looking pattern coming back, although it's not that clear. So this certainly looking much more positive than yesterday. As I said a couple of days ago, I think if we see the market closing above 1904, that would be a very positive sign indeed. It would be a sign that this sell-off, in fact, last Thursday was in fact a correction in a bull market. If you're wanting to add to gold shares or getting into gold shares, if you feel feeling aggressive, and they are aggressive investments, folks, then do nothing, folks, until you see that happening, or maybe wait for it to take out and close above the 1916. If if I'm even half correct on what I think is going to happen with gold, then there'll be plenty of time to get into it. Okay, the Goldman Sachs target, which is the same as my own target, is 2,300. We shall see. This is just a nice break up this afternoon. It needs to close above these highs to technically confirm that we've got a low in here. All right. Now the third market that I want to look at is platinum, because many of us are holding Jubilee, many of us are holding Sylvania Platinum, and maybe other platinum stocks. This is a weekly chart of the platinum market, and that's off the lows after a bear market that lasted many years, a final exhaustion down to the lows. We've moved up here, and we've moved up in 1, 2, 3, and I think we're in a wave 4 of this, with another wave to come. Now, there is a confluence here, and those of you that know a little bit about Elliott will know that wave 4 is normally 38 or 50% of wave 3. So if I draw that in, we can see that we're currently sitting on the 38% retracement. Can that hold it? Well, I don't know. I think we can easily get down to 1080 here. And that's a confluence of these old highs as well, folks. So, and there's a trend line here as well, which comes in about the same place. You see that all coming in about the same place here. So I think that I wouldn't be at all surprised to see a pullback in this down to that 50% level, which is at 1083. And that could cause us a little bit of pain. Nevertheless, this pattern and this bull market is still intact, and this is a very healthy looking pullback. So I'm very happy to hold my position in Sylvania Platinum, and I would be tempted, if I can muster a few bob out of my spread betting account, to buy some more of them. I think the share can do exceptionally well from here, and similarly with JLP, any pullback should be treated as an opportunity. So I hope this helped, folks. Let's go back to the VectorVest front page. All would seem to be good here, and I'll do another maybe longer video, and I can nearly hear you sigh, longer video tomorrow, and look at the shares in the portfolios. But I thought that was interesting, and if we look at the S&P again, it's still at that 42-47 level. This is a very important day. If this can be sustained and we can close up here, then we can see this market move considerably higher into the middle towards the end of June. Just remember that this market is mature, and it's come one hell of a long way since last April, last March or April. The market seems to have bought into the Fed's prognosis that inflation is transitory, but I'll leave that to the economists. Once a trader's job is to manage the risk, and as soon as you put a position on, folks, you're no longer an analyst, you're a risk manager. Okay. Thanks very much.